Hi everyone, this is Paul Lange from Discipline Training Strategies. I want to introduce you to what you're about to watch. It's an hour-long event that was presented live to free members at Discipline Training Strategies. This is called It's All About How You Get There. And this is what I would consider one of the more technical events. The events that I do range from a wide variety of topics, from what I call kind of softer events that have to do with discipline and how you organize things, right down to some more technical concepts. Naturally, to actually learn the technical analysis that's needed, you need to really take a full seminar program, but these events are very, very useful, finding a lot of problems that traders have and showing how to do a lot of things right. I think you'll enjoy this one. And remember, if you enjoyed this, there are many other educational events, articles, and Trade of the Week videos that you can have access to on the free stuff page, the greatest source of free information anywhere on the internet, right at Discipline Trading Strategies. Good evening, everybody. Good evening, sound check. Good afternoon. Give a nice 5 o'clock welcome on the East Coast for today's event. Everyone else, hello, hello, hello. Let's get going. I just want to, you guys are always so good. I just want to remind you in case somebody doesn't know or somebody's new. We're about trading, so I don't want any political comments in the room. I just, just because it's day after election, just want to make sure we don't do that. So we're going to get right to today's event. This is a very technical event. I try to switch them around a little bit. I know a lot of people sometimes don't love the softer ones or on soft topics, even though those eventually are the ones that really make a difference in terms of having like a free event like this. Number one most important thing is to learn charts. The goal of these webinars is not you're going to learn technical analysis here. I'm going to show it off a little bit, show you some interesting things, some things you may be doing right or wrong, and a lot of soft topics. And I think people really like these events for the most part. This one's going to be more technical. We're going to talk about how you get there. It's all about how you get there. And here's the slide you got. Nothing special on there I want to go over. Here's what we're going to talk about today, though. What does it mean it's all about how you get there? This is about trade selection, partly. If you pick fire, you often get burned. And if you're not sure what I mean by that, you'll see in just a few minutes as we look at some charts. This is also about management. No matter how careful you are, you will have tough patterns sometimes, and then it's how you manage. This will make or break your career. Now let's stop before I get too far into this and just talk about a couple of things, some introductory comments to this, because right after this, I'm going to go right to the chart I sent you. I don't know if some of you saw this. I sent you a little test in email that we're going to start off the day with. It's kind of a trick test. Don't get too upset about it. Trade selection, it's all about management. Eventually, this is something you've probably heard me say if you've listened to all the stuff on the free stuff page, or certainly if you're a seminar student, you've heard this. Eventually, everybody's career gets made or broken by their management. Now, that's presuming, of course, naturally a lot of traders don't make it because they never learn charts. You have to learn charts. That's what I teach, that's what the seminar program is about. But a lot of people learn charts and never really make money. I call good chart readers a good accomplishment to have done that, but once you've done that, good chart readers are a dime a dozen, so to speak, because a lot of people do the charts and they never learn how to make money properly. And most of the time it comes down to management. That's what the key is for most people most of the time. When people become fairly good at reading charts, they probably could be at a level where they could be making some money, but they don't, because they end up in an endless string of small wins and small losses because of fear, because of this is where psychology comes in all the time. And when you back it up and look at what's going on, 99.999% of the time, it is psychology, but it's not really psychology. It's psychology because it's driven by a lack of knowledge. First lack of knowledge is charts. But what I want to really get across to you is that in technical analysis, we don't have fantastic edges even when we're good. I equate it sometimes like blackjack, where the house has a 52 to 48 edge, and if you don't keep everything perfect, you lose that edge very quickly. It's the same thing with charts. So every little thing you can do to get the odds more in favor is what's going to make you a successful trader. And this is about one of those little things. Management is tough as it is, and then when you have a chart that's almost unmanageable, it's hard to manage it. So I want to talk about two things. I want to talk about the type of patterns you pick, because if you pick nicer patterns, they're more likely to be easier to manage. However, that's not a guarantee. I can't guarantee you that a beautiful, clean chart pattern will be easier to manage. However, I will guarantee you that a sloppy, wild, crazy stock will be difficult to manage. I guarantee you that. And then you're left with this terrible choice. you're left with this choice of either giving things lots of room or not following your stops or whatever it is, or taking lots of stop outs. And unfortunately, newer traders are drawn to certain things. And unfortunately, they're drawn to two terrible things. They're drawn to wild stocks. And that's why a lot of what I talk about in the free events, and you've seen several emails over the last 6 months about crazy stocks and nice patterns. A lot of traders are drawn to wild stocks because they feel they have to have some little biotech that runs from $6 to $12 in one day to make money. And that's insane. That's the hardest way to make money that there is. And then the other bad thing is that when they're drawn to these difficult stocks, guess what? They're the hardest to manage. And yet, newer traders, what do you think they're the absolute worst at as a new trader? Somebody type it for me so I can get a sip of my icy cold Coca-Cola. Exactly, right? So this is what I mean, this catch-22, that, and this is, I think, part of the reason why some people fail is because they're drawn to the wrong things, they don't know what to look for, and then it's like, they always, I love that expression. I didn't hear this until I was much later in life, that it's like a dog chasing a car. Even if he caught the car, he wouldn't know what to do with it. It's kind of the same thing. These traders go after these wild stocks, and then they get a hold of one, and they just botch it up most of the time. What causes this? I can kind of relate to one of the things that causes this because I think new traders are to trading as kind of like I am to golf. I love golf. I don't go that often. It's fun for me. I never got good at it. I never tried to get good at it. I was always kind of a go out and have fun once in a while thing. But no matter how bad a round I shoot, if you got to that 17th hole or something, and then you hit that 3-wood 220 yards and put it 4 feet from the pin, guess what? You're a great golfer. You're coming back. How'd you golf today? I golf great. It doesn't matter if you shot at 97. You golf great. I think it's the same thing with traders. You go after these crazy stocks and you hook into one and you make a lot of money on one. And then you spend that money over the next 22 trades trying to duplicate it. And it's the hardest thing in the world. You don't get paid bonus dollars for going after tough things. Part of the problem is I think people don't know what easy and tough is. So with all of that beginning, why don't we start, and I'll look at my notes again later and see if I forgot something. How's that? Which chart is more likely to get to its target? A is on the left, B is on the right. I'm going to run through A a few bars at a time, and I want you guys to participate as much as you can and help me manage this chart. Now, when we get to management, there's always some issues, right? I'm trying to get up to this star, okay? That's a big target, right? That's a big target. So don't just keep telling me you take it, you take it, you take it. Here's a couple things about management that you have to deal with that are just facts, that cannot be changed. It's just absolute facts. Number one, if you want to get to a bigger target, you have to go through some pullbacks. I've never seen a daily chart rally for 12 days and never trade below the low of a 5-minute bar. That's just never going to happen, period. So management is, and here's a definition, from the introduction of the course, management is the balance between trying to get to your target and maintaining some profitability if you don't get to your target. Would you guys agree that's a pretty good definition of management? Trying to get to your target, but yet trying to maintain some profitability if you don't get to your target, right? I mean, I don't know how you could define management any better. Now, you could skew from one end of the scale to the other, right? An all or nothing type management style would really favor getting that target even if it costs you money sometimes. And somebody else may be more of a scalping type person and say, well, I'm not going to get to these bigger targets, but I'm going to keep trying to chip out little things. There's nothing wrong with either style as long as you have a style, as long as you do something other than what I like to call seat of the pants management. What's the bottom line to how you manage? It's very simple. Are you making money or not? I respect anybody who's making money consistently, has passed the test of longevity. There's things that are perfectly acceptable to do that I don't do because it's not my style, and I respect that totally. What I don't respect is somebody who's been losing money his entire career and starts telling me that my management style is inappropriate because they know how to manage. Well, if you're losing money your career, you're doing something wrong, and you have to acknowledge that and change it, right? First step of Alcoholics Anonymous, admit you have a problem. So here's where we are in A, and the question is, as you start to move up, we very likely would have, and again, this is not a technical analysis course, but you have your stop in here somewhere to protect your initial entry. You got in here somewhere. And we start to move up, and here we go. We move a little higher. We're a third of the way to our target. We have some profit going. It's pretty nice. But again, I want to get to this target with the whole trade. I don't want to necessarily take anything. So somewhere in here, as we move above this green bar, somewhere in there, I'd be raising my stop. You don't have to, maybe you wouldn't, but I'm just saying that would be a typical thing you could do. It's a reasonable thing to do to raise your stop to there. You'll get the point of this in just a second. So we keep going, and there we go. And oh boy, well, how lucky. We raised the stop, and we came down and kind of tested that area again, but we're good. Held that by 20 cents, yay. And then we keep going, and then hooray, I got to my target. Woohoo! Great trade. Let's do the same thing over here on B. Similar concept on B here. We got in somewhere in here, and we put our stop to here, and we start moving up, and whoops. So almost immediately here, I maybe got stopped out. Now maybe my stop wasn't there. Maybe I get in down here somewhere or something. But originally you can see kind of the difference in this chart. Yeah, it was maybe tight, but that didn't happen over here. We kind of had a similar setup here. So let's say we get in down here somewhere. So that was our original stop, all right? So we don't have to worry about that. So we got in down here. In here, after that little move lower, I'd probably want to bring my stop up to here, right? Because I'm already getting close to kind of that break-even point. Not that that matters. And what happens on the next move? Well, we come down, we move up, right? At least when I get to here, I stop out. Bummer, stop out. All right, well, let's say we didn't stop out. Let's say we fell asleep, didn't put a stop in, didn't take the stop, or maybe we kept our stop way down low just because we knew this is going to be a sloppy stock. So now we start to move through here. Once again, I have an opportunity to raise my stop, come in, and oh, look at that. How does that ever happen to you? Like it comes down, swoops down, takes you out, and then goes all the way to the target. That ever happen to anybody? Yeah, so the question I asked you in the email was, which one is most likely to get to target? Well, it's kind of a trick question. There's nothing on this chart that would tell you which is more likely to get to target. My point of this is the topic for today. It's all about how you get there. It doesn't matter if this chart got to here or not. You probably weren't in the trade, right? And this is something I see all the time and have to deal with in the room sometimes with people that come to me and seminar students. They have some trade that maybe made it to where they wanted to go eventually, and then I hear this, oh, yeah, gosh, that trade worked. I just didn't stay with it. Well, if you didn't stay with it, the trade didn't work, right? You don't get credit for taking some crazy trade that eventually got there 3 times longer than you thought it would and stopped you out along the way. So this is the problem, is trying to pick charts that's not going to happen to. And now, as I said in the beginning, I can never guarantee that I'm going to have a very clean pattern on the chart I'm on. I can't guarantee it. Stuff happens. But I can guarantee that if I intentionally pick wild stocks, this is the norm. This is what's going to happen over on the right here all the time. Any questions on that so far? Let's kind of take this another similar approach here. How would you manage? So we have an entry, we have a target. This is going to be a hand-drawn chart here. So we have an entry, and we start moving higher. We have a pullback here of some kind, and boom, there's a little inflection point. We probably raise the stop to the low in here somewhere, right? Move higher. And this is just what I call a clean chart. This is what you like to see. It's a controlled pattern, and it's controlled because the bulls are in charge of this, right? The bulls are dominating totally. We run up. When we run up to here, what do we see? I know this might sound like an obvious, stupid question. What do we see? Well, right there, we're not sure. But right here, what do we see here? What is that? What is that exactly? Wow, that's too good of an answer, unfortunately. You're supposed to just say selling. And then my question would be, what kind of selling? What are the 2 types of selling you could have? One of them is what Paulo said, profit taking. If you're in a stock long, that's what you want to see, is profit taking. In other words, people get in, they run up, they run up, they run up, we get way up here, and people down here are saying, hey, I love this stock and everything, but guys, I want to take some profit. And what you have is you have some people selling some of their shares, and you get what we call a retracement back. And that's why it's retracement, because it's some people taking some profit, right? If you ever retrace the whole way back, it means everybody's taking all their profit. That's not good. That's not what we want to see. What's the other type of selling, though, besides profit taking? What's the other type of selling besides profit taking? Well, panic, forced, short. Well, short is not, yeah, but short is not mandatory selling. That's voluntary. That's people that want to sell. Getting out. Well, what we have is the nasty selling from over here somewhere, right? In other words, somebody went long over here, and what happened was the stock it gapped down or went flying lower, and they were a deer in the headlights and they got stuck. And they're sitting here and they're risking $500 and they're down $2,500 down here, right? And when you're down 5 times the amount of money you're supposed to be down, what is your goal in life? Yeah, Art already said it because he knows. It's to break even. Look left is not a concept. Look left, I don't want to see that ever typed on the screen. It's not relevant. You can look left and see nothing and have more resistance than you could ever believe. You can look left and see a ton of stuff and it means nothing. You have to understand what's there. Looking left is a rookie comment. It is not true. So yeah, so so this is what nasty selling is. So when we run up into here, in other words, we could have been fine, all of a sudden we run up to here and we hit this key area that is resistance, right? And because it's resistance of some kind, we have sellers from here, and now we get extra selling. So now you not only have profit taking, but now as you start to sell, you get these people from here, maybe you call it panic if you want to, that are pounding it harder. So that's what you don't want to see. Now, when do you get that selling from over here? When you don't pick a good chart pattern, right? Knowing how to pick chart patterns means you're going to try and eliminate the concept of selling from over there. And by the way, going to new all-time highs does not mean there won't be selling. That is not relevant to that, really. You can have a lot of new highs bring in selling, period. So it's not a matter of just looking to the left. It's a matter of knowing the chart well enough to say, hey, there may or not be selling here. But this is kind of the first step to say, if I want a clean chart, if I want to be able to manage, in other words, if I want to be able to manage, this is a nice chart to manage. Anybody should be able to manage that, right? But if I pick a chart where it's not a good pattern and not that good at picking charts, I'm going to be picking things that all the time are going to get this excess selling. And what may happen is you may come down to here and stop out, and then you still end up here. And then you're going to go, oh, wow, I am a good chart picker, but you're not probably. Now, it's no guarantee, like I said. You can have a difficult chart pattern even if you picked a pretty good chart because stuff happens, right? You could hit some level. In other words, charts are being made all the time, and we can only base our odds on what we can see and what's visible. There could be just simply the case, big money, somebody said, hey, when you hit 75, I want to sell 700,000 shares, right? We have no knowledge of that. We're making a chart. So you could have that happen, and that's why we have stops and that type of thing. And you could have just a really hard sell-off, and then it recovers. You can't avoid that, and that's why sometimes stuff happens. Let's look at a similar pattern here where we start to move up, right? And there's the same concept we have. And there we go. We're going to go ahead and raise the stop there because that's going to be one of those little pivots I want to protect, let's say. And when you do that, of course, it's very critical. I'm just making it sound simple here, but it's a very key when you do that. And we run up. All right, so what are we thinking right now? What are we thinking right now about this chart pattern in general? Yeah, I drew to the left, but the concept of saying look to the left and you'll see resistance is not a valid statement. A lot of people say that. It's not a valid statement. It's not true. Yes, everything happens to the left, but there could be nothing that you see to the left, and yet from up above it could be something. Yeah. What do we want to do here, though? What are we thinking when we see this pattern right now? Well, one of the first things I'd probably be thinking is, boy, there's kind of a nasty red bar, right? And we barely made a new high. So this, again, this is one of these indications. And remember the theme of what I'm trying to get across is that every little bit helps. Every little bit that you know more about a chart, that you know about technical analysis, can help improve those odds a little bit. I don't have time to go through it now because it's kind of a long presentation, but I've somewhere on the internet, I have my baseball analogy, the difference between a 250 hitter and a 333 hitter. It's very applicable in trading. And every little thing you can do to help increase your odds just keeps you out of that trade or decides to make you manage a little differently that preserves profit or lets you run to a big target. All those little things pile up. The average trader is fairly blind to the things that really matter. They just know some basics, and that's why they never end up making money. So what do you think when you see this? You're thinking, okay, this isn't great because we barely made a new high. Now we have this nasty red bar coming in, right? So you're probably thinking, and probably rightfully so, that should maybe start being a little more sensitive about protecting something here. So you start to move up and you go, okay, here we go. All right, thank you, because as you can tell, wherever I got in here, it's probably, kind of in that break-even zone or something, got a little profit, so I'm going to raise my stop to there, right? That's what most people would do. I might even do in that case because it's in a tough area. And look what happens. Boom. The next bar comes along and stops us out. Now, what brought in that red bar? Well, several things could have. Again, it could have been some outside selling. It could have been, here, Nate, to make my point. It could have been you look to the left and you see absolutely nothing there. There's nothing here going back for years. But maybe the stock had gapped down from up here last month or 2 days ago or whatever it is, right? And that gap down will offer a tremendous resistance area even though you see nothing from here to here. So maybe you poked above this high and all of a sudden these people who were stuck in this gap down said, man, get me out of this thing, it stinks. So you could have had that. You could have also had the fact that we just kind of, for no terrible reason, we could have just maybe run out of buyers and we didn't make a really significant new high and everybody got scared and said, oh, this thing's falling apart. And then there's that snowball effect, right? If everybody's sitting there saying, hey, what's going on? And then one person sells and another person sells, and then the stock goes down 3 cents and more people sell, and then you trigger some stops and more people sell, and you get this big red bar. And sometimes it doesn't mean anything. Sometimes it does. But you have all this come together, and now we end up stopped out of the trade. But hey, I made a little bit of money. That's great, right? I protected my profits. There we go. And whoops, the red bar was nothing. Oh, and here we go again. If you were still in the trade, you moved your stop up to here, you got taken out. Now, this is what I mean by a sloppy pattern. And this is what I mean by, you can tell me at the end of the day, if this is an intraday trade, you could tell me at the end of the day you had the best trade in the world. If it's a swing trade, you could have told me, over 3 weeks you hit the biggest target in the world, but you didn't hit the target. It's always going to be, oh, I picked the greatest stock, but I got shaken out, right? It wasn't my fault. I got shaken out. The market maker shook me out. The market maker took my stop, or other ridiculous comments like that. You just didn't pick a good chart. Because you know what? There are charts that don't do that. Your goal is to find a good chart. And number two, since we can't always know what's going to be a perfect chart, our goal is to be able to manage this stock to get it to here. Now that's way beyond what we're going to do today, but you should be able to manage the stock to here even with this pattern. There's a point to this slide. It's not really redundant, but there's a key question I want to ask you after this slide. You're in a trade. It runs up. Your target's way up here. You're up some money and you feel pretty good, but you really aren't at your target yet. You don't have any real management plan like 95% of the traders do. They say they do, but they really don't. Here's a chart you see you like. Boom. You like it as an entry. The stock takes off. You take your entry right in here. This is the type of thing some traders do, is taking that entry right in there. Stock does not get all that close to your target, but you're up some decent money. You're in that in-between area because most traders don't have a real plan of any kind that they follow. They think they do, they say they do, but they really don't, or it's written down somewhere, but they never follow it. Then you get in this in-between area, all right? You're up some money. You're trying to make $800 on this trade, and you're up 300, right? And you start saying, what do you have those two voices in your head saying, one saying, hey, you're up 300 bucks, you can't go broke taking a profit, why don't you lock that? The other voice is saying, hey, you have losses sometimes, $300 doesn't pay for the losses, you got to make 800 on this trade, what do I do, right? You ever had that conversation? Anyone? Ever have that in your head? It's not the devil and the angel really, but it's whatever it is, yeah. And if you're having that conversation, anyone else ever have that conversation? If you have that conversation, I mean, the first obvious reason is because you probably don't have things planned out very well in terms of how to manage. Now, I don't want to be too jump on you for that because no matter what type of plan you have, there's always going to be a little gray area. But if you're doing this all the time, if every trade you're, oh, what should I do? Then you just have a simple management problem, right? Which is a big one, and you're never going to be successful if you don't. But there's times where anyone, even I will get in an area where I'll say, okay, boy, I'm a little torn here. I'm right in between. I'm right on the fence between what I'm supposed to do or not, right? So you're up this much money, and you just let it go, and you're saying, oh, man, okay, now I'm only up 200. I'm only up 100. Oh, man, what am I going to do now? I say, oh, when you come down and you're almost down to break even, you're almost going to turn red after you had half of your goal. What are you dying to do, everybody? I'm not saying it's right or wrong, but what are you dying to do when you're up? You're trying to make 800. I'm just throwing some numbers out here. They could be small or big to you. It doesn't matter. You're trying to make 800. You're up 300, and then it starts bleeding, and now you're up $75. What are you thinking? You thinking close the position, take the small profit, and then what happens is, ta-da, the greatest thing in the world happens. What happens is you make this little pivot there, and you go, raise my stop. Whew, I'm green, right? $50 profit guaranteed on that raise stop, right? And then, oh, okay. Well, you know what? That's okay because I'm green. I made $50. I'm happy. And then, of course, you stop out, trail out, technically. And then, of course, you get to your target where you would make $800. So you took 50 instead of 800. Now, was this the right or wrong thing to do? Well, that's a very difficult question. But what I want to ask you is, does this happen to you a lot? Yes or no? I'm going to ask you two more questions after that. Does this happen to you a lot? Yes or no? And a valid answer is, I don't know. Okay, this happens to you a lot. Shut up, Mark. My next question for you then is, if you don't know, and you're probably just keeping that in your head and not typing it, if you don't know, or if you're saying, yes, it happens to me a lot, how often does that happen to you? Precisely. How often does that happen to you? Maybe you don't have to tell me over the last 5 days, but how often does that happen to you at some time in the past? In other words, why don't you know how often this happens to you? Why don't you know? Yeah, I know why it happens, but the question is, if you're trading, and if you're trading either paper trading with the goal to be trading or you're trading with money, and you don't know the answer to this question, you shouldn't be trading, right? You don't just go through trades and have this happen to you and say, oh yeah, that happens to me a lot, and then do nothing about it. Do you get my point, everybody? That's laziness. It means you don't know or you don't care or you're not trained right, but that's unacceptable. I don't think you realize how unacceptable that is to me, because that's the whole point of getting better at trading, is that if you're going to let this happen to you, now it's going to happen to you. I don't even care how often it happens to you. My point is, what do you do about it? Do you just say, oh, it happened again and go to the next trade? And if this happens to you continuously, why can't you do something about it? It's like, what's that movie with where he keeps going through the same day over and over and over again? If the same thing happens to you every single time, Groundhog Day, that's it, Valentine's Day, Groundhog Day. If the same thing keeps happening to you time after time after time again, why can't you do something about it? Moving on. Wild, daily, tough swing. Now, when I put charts up here, I generally like to use charts that are trades that I've done recently. Not from 1947, but this last few days. Sometimes to find an example of what I want, I may have to go back a couple days. Not every day everything happens. However, these are examples of garbage. So I did not do these trades. I would never do these trades. This is not a trade. I'm just showing you examples of charts that are tough. I have people tell me daily buy setup. Now, again, I'm not getting into what buy setups are and all that stuff. This is crap. This is garbage. This is pure garbage. I wouldn't touch this with a 20-foot pole, even if you gave me a 30-foot pole. But nevertheless, people will take this. And here's the problem. Maybe someday this will make a new high. That's great. But this person won't be with the trade, because here they get in. That's right there would be an entry for some people. All right, there's your entry. And oh, it stopped out, right? Like 2 bars later. This is the daily chart, so it stopped out 2 days later. Falls down to here. Oh, there's the real entry, right? I goofed. That was too soon. Of course, it was sitting on the 20. Isn't that a good entry point? Well, I don't know. It seems to me like the 20 is a good entry point. Well, now I'm down on the 40. I guess that's a better entry point. So you get in again, and now you're looking. Now you start saying, right now you start justifying. Let's all look at the retracement and look at the support area and look at this and look at that. Again, to a novice trader, you look at some of the basics and you may say, hey, wow, boom, boom, and support and retracement, and wow, that's a great trade now. This is perfect. But you're ignoring half of the chart. You're justifying what you're doing, and again, you stop out. This is a current chart as of today. Will it go higher from here? Will it go higher from here? Anybody? Is that going to go higher now? Yeah, who cares? I don't care if it goes higher. And this is one of the classic things I have to deal with. Somebody sends me a chart and said, Paul, do you like that? I go, no, I wouldn't touch it. And then it goes higher. And they go, oh, I could have done that. Well, If you do this all the time, you're not going to make money. Yeah, it may go higher, I don't know, but I don't want a part of this. This is a mess. This is ugly. This is exactly what I'm talking about. This is how you can avoid tough trades is don't go after this type of stuff. An intraday trade. Now here's the daily chart, and see that little snippet of the daily chart? I know you can't really see a whole lot of, so here's the full daily chart, just a quick look. So it's a pretty wild stock, right? And we're looking to short this up here on the way down. One of these days, whatever it is, doesn't matter really what day it is. And I guess I could have found a better stock to exemplify this, but I just want you to see, like, if you're shorting this on an intraday basis, that probably stopped you out. And again, it shouldn't have, but I'm just saying for most traders, it came above all these prior highs, it probably stopped you out. This came above these prior highs, it probably stopped you out. It can be a tough chart because you're picking on something very tough. So even the intraday pattern can be very tough on stocks that have sloppy daily charts because remember, your buying and selling comes from all the time frames. So if you're trying to, with sloppy charts, the problem is you get down to an area like this and, and a handful of people go support and they start buying it. And you got people that were long up here that are so long and I can't take this anymore, I'm selling it. And you get this battle, and you get this back and forth push. What you want are the stocks where one party is in control, where the bulls are moving things and they allow the bears to sell when they want to. When the bears are in control and they force things lower and they allow the bulls to bring things back up to an area they like better. That's the type of chart you want to see. Not this battle back and forth where you're just lost the whole time. Or if you're going to do this, you have to learn how to manage it properly. You have to manage it differently than most manage some trades. So what's the opposite of that, Paul? If those are examples of garbage, well, what's good stuff? Well, here, this is today. This is today. Now, remember, my goal here was not to go back 13 years and find the 3 best examples in history. My point is to show you you can find good stuff every day. This is today. So this may not be the prettiest chart I could ever find for you, but what's the point of finding a pretty chart if it's a trade I didn't even do and it happened 6 years ago, right? I don't have like this warehouse of pretty trades just to show off. So this is today. This is today. It's not hard to do this. I felt this was just off the hourly chart. Yeah, this wasn't today. ENVX. No, I'm sorry. This was one of these is from today. This was last week. Sorry. I don't have the date on here, but this was like the first of the month or something. I thought this was a clean setup, clean support area. I'm not really here to last Wednesday. Thanks, Art. Art, you can be in charge of telling me what day these are. I didn't leave the date on here, but you can tell on the chart kind of. I don't know why the date's not down here. It somehow got cut off, but that's okay. Yeah, that's just it. ENPH and then ENVX. I mean, how am I supposed to keep those straight, right? Did I say? Oh, yeah, it's a 60-minute chart. You know why? Because the other charts are daily, and I just copied and pasted it there. So that's a 60-minute chart. Thank you, though. Some people may not realize that. So this is a 60-minute chart. So again, I'm not here to try and justify the setup or whatever. I thought it was a great setup. And my point was that once we hit this level, and we did it on this puke out, which I really like, got in down here, and look at how easy this is to manage, right? I mean, you'd have to be, I couldn't come up with the right word. There'd have to be something wrong with you that you couldn't manage that, right? How easy is it? And what I'm looking at, I'm just looking at right through here. Now I got out here, but just what a nice thing. It's any type of normal management you're in. And this is at this point, obviously they're selling in the morning, but this is what I want to see. I want to see a point where in this case, the bears puked out. They exhausted themselves. They're gone. And now the bulls are just in charge. We just have some profit taking. You run up this far, and the bulls say, okay, who wants out? You want out? You want out? That's fine. Okay, let's take it higher again. Who wants out? You want out? Boom, boom. And I got out here. Do you get my point, everybody? And again, this isn't a huge trade. It's a good trade. It's not a huge trade, but it's just a very simple, clean chart. And I know a lot of you, some of you are seminar students, some of you have been around a while, and there's new people all the time. And I know a lot of new people you want to hear the fancy new strategy. There's no such thing. It's learning how to read a chart. It's all this little garbage that makes the difference. Now, can I do this every trade? Of course I can't. I mean, I try to. That's the goal. I try to pick charts that I think are going to be clean. And that's why so many times in the room, right, Art, people suggesting stuff. What's my ratio of taking trades from suggestions in the room? 1 in how many, Art? Let's just see what Art says here. 1 in how many do I take? 5%, Larry says. Yeah, 2%. It's in between there somewhere. I think 1 in 20 is high, and that's my point. Some of them I look and say, okay, yeah, that's okay. Yeah, I'm not going to do that because I think the little pieces are missing to me. And even when I take something, there's no guarantee I've got it right, but I have to do what I think is right. So that was a trade that day. Here is MQ. Now this is a gap down. Now the first thing you may be saying is, well, wait a minute, Paul, you don't want to do wild stocks. Gaps are wild. No, not true. Good gaps are the opposite of wild. They're extremely precise. As a matter of fact, the best pattern you can have is a highly rated gap. Here's an example. Now, when you take gaps that are not clear and you have a battle between the bulls and the bears, that's when you get your head handed to you because you run higher, you get slapped, you run higher, you get slapped, and you get one of these. That's a gap where nobody knows who's in charge. But if you get the right gap, if you understand gaps, which is kind of a separate part of technical analysis to me because gaps are uniquely different, you have somebody that's in control. Here's a very bearish gap. I got in about as early as I could and look at the pattern, right? Could you, anybody listening to me, could you manage this chart? Yeah, this is yesterday, right? Thank you, Art. I thought I made a mistake. Could you manage this chart? Could you get in this trade and stay, even if you're up a lot of money, even if the phone rang? Could you manage this chart? Mark, that's the way I like to phrase it. Even my idiot can do that. Yeah. Now, in all fairness, I only got half this. Well, I got about 2/3. I got out here. There we go. Sorry. Never looked at this on a 5-minute chart. I got out here. That's right, because that acceleration was huge on a 1-minute chart. So I got out down here. It was the best entry for a while. We did go lower by the end of the day, but I was fine with it. But point simply being, wherever I got out, I decided to get out for a reason. But the management of this was a piece of cake because it was a nice, clean, clear pattern. Again, this was yesterday. A trade from today, a trade from yesterday. Trying to just prove my point that I'm not just sitting here saying stuff to you, that I do what I teach and I teach what I do, right? That's my saying, by the way. I do what I teach what I do. Let my spirit carry me. Another one. This is from today. This is from today. Wow, this is incredible. This is from today. Hang on one second. Right, Art? Art verified this is today. I get confused. I'm not sure. Who sings that song? Is that the Eagles? Fly like an eagle? I forgot. Anyways. So again, this is not a huge trade, but just showing you the simplicity of management, right? Steve Miller, that's it. Thank you. Yeah, I knew I would have got that in a second. So entry up in here, and this is a 2-minute chart. So this is a fairly small time frame, right? The bigger you go in time frame, the smoother the chart looks. So here's a 2-minute chart starting at 10:20 in the morning, and look at that pattern, right? How would you not take that down to here somewhere? Now, based on the pattern of the chart, I got tight down here and it did end up going higher. But how could you not make money on that? So identify the pattern, manage properly. Do you see how easy these charts are? Everyone, do you see how easy these charts are? And again, this is today and yesterday. 3 trades from today and yesterday. Didn't have to look far. Trading is so simple when you keep it boring. Boring. What's left? Do we have anything left? This is one of my favorite charts of all time. This was, I think I put this, it was maybe the trade of the week or it was something. I remember doing this for you guys before. This is a longer term trade. Look at this weekly chart. Right? Look at that weekly chart. I mean, that is something, for some of you, maybe it doesn't mean much to you. For me, that's something you could just frame and put it on your dashboard, put it on your monitor, make wallpaper out of it. Clean as could possibly be. And it's so clean. You know what else clean charts let you do besides manage? And Greg, this is all over the manual in the summer program. What do clean charts let you do? I should calm down? Yeah, no, but better than that. What's better than that? Yeah, sleep at night, fine. Yeah, no. You still can't sleep easy. Who knows? Somebody could have dropped a car off a Carvana and dropped on somebody's head and they got sued for $12 billion. No, you're close. What else? This is all over the seminar program. Really clean charts allow for, come on somebody, really clean charts allow for, yeah, that's all calm, it's all management, yeah, metal, that's the byproduct of what I'm going for. They allow for great entries. I got in right there. I mean, just, it's on the bottom of that tail. Why? I didn't have to wait to get up here $1 million to prove I knew what I was doing. Look at this chart, right? I just went for the littlest entry concept, and this is a weekly chart. I went for the littlest entry concept on a 15-minute chart. Do you understand what I'm saying? Coming down to a 15-minute chart because of the precision of this weekly chart allowed me to do that. Now, you can't always do that. So when you get an entry like that, it allows you to have profit on a very small run and allows you lots of different options and choices of what to do when you're managing the trade. Take two identical charts and two identical moves. Trader A, the good trader, gets in here, right? Green the entire time, right? A nasty pullback, but they're green during the whole pullback. Is it easier to manage when you're green or red the whole time? Stupid question, right? Green for anybody because you don't make dumb mistakes. Trader B, dumb trader, gets in here, right? Now, both of them could have made decent money getting to this target up here, right? But what are the odds that this trader is going to be with the trade? Because from the moment they got in, they're being punished. And somewhere along the way, they're going to say, I can't take it, get my stop up, right? That's just what people do. So great clean charts allow for better management. They allow for extremely precise entries. Questions? You want to go back to any slide or talk about anything else? Questions on anything? If you missed it in the beginning, what I said was that I'll kind of conclude with is that trading is about getting odds in your favor, and those odds come from a whole bunch of things. Yes, there's the basics of technical analysis, and if you know all the basics of technical analysis wonderfully, you'll never make a penny. You have to get way beyond the basics of technical analysis. This is what I call understanding technical analysis at an A level. It's not hard to learn it at all. It's not hard to learn technical analysis. But you have to learn beyond the dumb level that you see on the internet. A couple presentations back, a couple months ago, I did a presentation called Learning from the Internet. We made fun of the ridiculous, stupid things that are taught on the internet that will never make you money. So you have to get a really good understanding of technical analysis. But then on top of that, you have to keep stacking every little piece of information that you can, every little thing that you can find out. It's no different than like anything else in life. Whatever your job is, whatever you do, if you're a policeman, right, or whatever it is, you don't just go out and take 3 pictures of the crime scene. You go and you take pictures and you rake and you shovel and you have 3 people searching the crime scene and you ask every neighbor, you canvass the area, blah, blah, blah. You know, I watch police shows. So you do all that stuff because you want to get every possible piece of information to get the odds in your favor of catching the criminal, right? If you take that analogy, I've never done this before, so forgive this analogy, but if you take the analogy of a technical analysis person and turn it into a cop, the cop would just go out, ask, okay, somebody got shot, all right, does he have any enemies? No, okay, all right, I'll write it up, I'll see you later. I mean, that's what a lot of people do with technical analysis, just a cursory glance and say, oh, uptrend, downtrend, support, not support. So you want to get everything you can in your favor. And that's, I think, great topics for me in these presentations. No, this is not how you trade. That takes some time. That's what the seminar program's about. We talk for a long time about, how to read charts. But here's a little detail, a little minutia point that if you don't understand charts, it's not technically beneficial except in an abstract way, just to understand that, hey, there's charts that will be easy to enter and easy to manage, and there's charts that'll be extremely difficult and are going to bite you. And you can't always get the right chart, but if you don't try, it's guaranteed you're going to have a hard time. If you do try, you'll have good odds of getting better results from better entries and better management, all right? To earlier stuff being stopped out, you asked how often this will happen to anybody on occasion. Yes. Well, Camilo, great questions. Let me take your first one first. My point, Camilo, at all, I hope I'm saying your name right, excuse me, Camilo, is my point was not how often you stop out. I want to make sure you understand this before I move on. My point was, do you know how often you stop out and why? Do you understand the difference, right? Okay. Because stopping out, of course, everybody's going to stop out. The question is, to become a better trader, are you doing something consistently wrong that you can improve on, right? That's the thing. Now, as far as your second question, what is an inordinate amount of stop-outs? There is no magic number, Camilo, because this is a math question that comes down to the way you trade. You could stop out 3/4 of the time. You could stop out 75% of the time, Camilo, and be a great trader. You could stop out 66% of the time, be a great trader. I tend to stop out about 50% of the time. And based on your numbers of 15 or 30, that may shock you. Because what a lot of traders do, Camilo, is they don't stop out a lot. They have what we call a good batting average. They get 3 out of 4 trades with it. But guess what? They lose money. Because the only reason, you see, let me say this also, and I don't mean to say this in a bad way to you, but when somebody comes to the room or they're asking about the room and the first question they ask is what's your batting average, which is of course how often you stop out. When that's the only question they ask, I know this is a rookie, because your batting average alone is meaningless. It's a combination of your batting average and what we call your Sharpe ratio, or in other words, how much does every trade make? If I have a $4 move on my winning trade and my 3 stop outs are 50 cents, I'm making a ton of money, right? So it's a balancing act, and neither way is right or wrong. I do not, it's unlikely that you could have like a 70, 80% batting average and be making money unless you're an extremely skilled active scalper. You'd be taking very small profits on stuff. The sweet spot, I think, for most traders is batting in that 50, 55% level, but then making maybe, 1.5 to 2 times your profit compared to what your loss is. Eric, you want to cough up? But you're probably at 50, I'm going to guess you're at 50%, Eric, because I think you trade kind of like I do. Yeah, and actually for Camilo, like long term for the last 3 years, I've been batting, 40%? But my Sharpe ratio is 4 to 1. In other words, my profits are 4 times my loss. So I have more losers than winners, but my winners make 4 times what they lose. So it depends on how you want to trade, and it depends on how good you are picking patterns. Now the default, Camille, which is unfortunate, is that a newer trader, a novice trader, who doesn't know the charts well, will never find nice moves, right? Does that make sense? So they default to trying to grab quick little profits, right? But they're never going to have enough little profits to make up for what's still inevitably going to be some losses. So when you know charts a little better, you can say, hey, you know what? This thing's not just going to move 13 cents. It's going to move 85 cents, right? So it all just goes back to your knowledge of what you're doing. But you can't get locked into trying to say, I have to have a certain batting average. Now, you can eventually. I mean, you can develop a style. You should develop a style where you're going to say, here's what I want to try and do. I want to be more of an active scalper. And I'm going to end up taking fairly equal profits for equal losses, right? I'm going to make 500 on a trade, lose 500. Well, if you're going to do that, if you're going to do that, you have to be batting over 50% to make even a penny, right? That's the break-even number, right? Batting 50%, winners equal losers, right? You make 500, you lose 500, make 500, lose 500. So if you're going to be equal winners and losers, you got to be batting over 50%. If you're batting 75%, now you can start having losers that are even bigger than your winners. The problem is what a lot of people end up defaulting to, and I just know this from working with people for years and years and years, is ending up with they try to go for bigger winners, they don't have the skill to do it, and they keep changing their management, and they end up with a whole string of very small winners and very small losers. They're afraid to get any kind of bigger loss going. They don't have the confidence to know when to get in or out of something, and then they have a string of small winners. And this is where some people get locked in. The typical pattern for people is to start off kind of clueless and get frustrated and take some big losses, right? Initially, you take some big losses, and that's why when you come to trading, you'll hear that famous expression that traders go broke taking large losses, and that could be true. But I honestly don't think that's the bigger problem in trading, Camilo. Right. I don't think the problem in trading is people taking large losses. Now, obviously, if you start off, you take large losses, that's terrible. And yes, I'm sure some people go broke doing that. But here's the thing to me. If you take huge losses, it's like getting punched in the nose and you have a broken nose. You know it, right? If somebody punches you in the nose and you're bleeding all over, you don't go home and say, oh, I didn't notice that. Big losses hurt, and you know them and you feel them. And even somebody that's fairly ignorant will say, oh my gosh, I got to do something different, right? The problem with small profits, Camilo, is it's kind of like cancer, right? It's kind of like you don't really recognize you have a problem because you keep saying, oh, I'm batting 60%. I'm a good trader. I have more winners than losers. I'm good. All I have to do is hang on. What have you said this to yourself? All I have to do is hang on a little longer and I'll be making money, but you never do, right? You never do. And the next week's the same, the next month is the same. You just keep going in this cycle, and you eventually burn out. So it comes back down to just really, I hate to say it, but just gaining a good knowledge of charts to understand where you have odds, where you can push things, how to manage stops properly. A big thing is managing stops, all kinds of things to learn in trading. Thanks for the question, and let me know if I answered it. If you have another question, does anyone else have any questions? If not, it happens to be 6:02. All right, if you're in the room, I'll see you in the morning tomorrow. Hey, Paul. Great name, Paul. Otherwise, next thing we'll be doing, like a week from next weekend, will be the intro class. So we'll see you for that. Take care, everybody.